Asian stock markets fall while European shares rise. Japan vows $60 billion to boost the IMF while Spanish yields jump after auction. Traders await earnings from a slew of U.S. companies, including IBM, Coca-Cola, Goldman Sachs, Intel, Johnson & Johnson, and Yahoo. I'm Brittany Umar, and the morning call starts right now.
Good morning, everyone. I'm Evan Lazarus, Chief Knowledge Officer here at T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the morning call. So we got a real mixed bag yesterday. Selling did continue in high beta momentum stocks. The Dow held its gains. Tech stocks, of course, were the weakest. Financials rallied. So, Evan, how are you setting up for today?
Today's going to be interesting because yesterday was one of the more interesting trades that I've been a part of in a while. Yesterday you saw clear divergences in the market. You had a Dow that was strong for the better part of the day. I think the Dow finishing positive on the day, and the S&P is actually finishing relatively strong. There could have been some selling towards the end of yesterday, but some of the high beta leadership that everybody's been watching really taking it on the chin yesterday, seeing some selling. Apple, Priceline, Google down anywhere from 3 to 4% individually. So there really was a clear divergence. The leadership stocks that people have been going to as this rally's continued really saw some aggressive selling yesterday. So it set up an interesting type of trading environment. With that said, let's take a look at the S&Ps just to get an idea of what's going on here. And you can see the clear break of the trend as of last week. We had a 2-day snapback. Which was Wednesday and Thursday last week. Friday, the selling continued. You can see our key moving averages right into our 8 and 21, which are now turned down, which is not a good sign for the bulls. As you can see, for the better part of the last 4 or 5 months, our averages have remained up and strong, and now they're turning. That's telling us a story about price. The movement of price is changing, and the market dynamic is changing slightly here. I do anticipate us to go lower. This does set up for a push back to the 1340, and I would even anticipate maybe even a break of that key support level, and then maybe a bounce thereafter. So basically it would look something like this: a push down through support and then snap back. So that's what I think a lot of the traders are going to look for over the next 2 or 3 trading days.
And so as you're expecting us to go lower, and you're saying things don't look good for the bulls right here, is this a market for the shorts with all the consolidation we've been seeing?
Well, I think the interesting thing about shorting is that shorting's not necessarily a long-term investment. Shorting's a trading strategy. So if you are, if that does fall into your, risk profile, I think there are lots of opportunities, to look at here to nibble on for some trades to the short side. If the market's going to go lower and you're flexible and objective enough to be able to trade from that direction, there's plenty of opportunity setting up, especially as we've gone into earnings season. We've seen a lot of these stocks trade off post earnings announcement. So there has been some really, really good shorting opportunities if that's, again, part of your risk profile.
Well, for investors looking to buy the dip, should they do so, or do they have to worry about falling knives?
I think you need to wait. I think, the mentality of the trader is instant gratification. Everybody wants to make money right now, today. So every time the market ticks down, the thought process is, well, I got to buy this. Well, let's take a look at a bigger picture chart here, and I think it kind of tells a story. We have had a multi-month, multi-week rally. It would not be unexpected or even unhealthy for this trend to remain intact if we saw a 3 to 5 week pullback. I think we could, again, we could pull back further. We look at some of our retracement levels here. Even if the market were to pull back, let's say 50% or 38%, which is still lower, the trend still remains valid and intact. And I probably would be, waiting a little bit on the sidelines, waiting for the pullback to possibly come even further down. And then when the time is right, in the morning call, Scott, I'm sure, will lay out a buying strategy. But right now, I think you're a little early. All
right. Well, big headline today, of course, is Goldman Sachs earnings, reporting Q1 earnings per share, $3.92, $9.9 billion in revenue. How much will their earnings set the tone for trading today?
Well, I think we need to look at how price reacts. It's really more about how the market reacts to the earnings, not necessarily the earnings report. We've seen good reports out of a lot of companies over the last week or so, but there's been selling from those reports. So let's take a quick look here, real time, at pre-market Goldman, just to get an idea of what it's doing. Selling off, you can see the stock closed yesterday around 118.5, now trading down around 115 and change. So down about $3. After the announcement. So once again, you're seeing the market sort of tell you a story that it's a buy the rumor, sell the news type of trade right now. So We need to respect that. Goldman also on the weekly chart, if we just get a bigger picture look here, has not been a very good picture of health. There's been actually an outflow of money here as the market's made new highs over the last couple of years, and we've seen, especially in the last 6 months, a very profound trendable, tradable rally. This stock hasn't really done much of anything. We saw one pop from 80 to about $1.20. But again, lower highs. If you look at the bigger picture, the stock's telling you a story about lower highs and lower lows. And that's generally not a healthy sign. And once again, post earnings, you're seeing some selling here again. So I'd be very careful about stepping into this trade from the long side.
All right, well, let's check the temperature of some sectors. Let's go into retail first. How is that shaping up for today?
Well, retail's been one of these sectors where it's been an outperformer, if you will, trading great with the market rally. You can see that the chart here, just nice trendable, tradable rally. Saw some selling over the last 2 weeks, which isn't unexpected as the markets come off. Looks like it's trading in line with the S&Ps. Some of the bigger names in this, and this is the RTH. Some of the bigger names in this ETF are, Walmart and Target and Amazon and Costco. So keep an eye on those. Walmart's been an outperformer actually to the RTH, but this to me possibly setting up for maybe one more leg lower. You have a nice area support in the RTH around $39. Wouldn't surprise me if we pulled back to the $40, $39 area, where I think it's probably a safer bet to nibble on a long down there than right here, right now. Okay,
yesterday you mentioned that a stock like Lulu could set up for another trade down today. Could that make for a quick active day trade today?
It could. For sake of disclosure, I am short some Lulu. I am looking at this as a bear flag. Big impulse day down last week. Just a couple of days of snapback. I am anticipating a break of this little trend line. Could take us back down to this lower pivot area, which is the mid-60s. That wouldn't be surprising. So I am short Lulu. It has remained strong relative to the market. It is, still basing on the high, so it is a higher risk trade right now. But it is setting up for what potentially could be one trade down.
Okay, let's check in with the Qs as tech stocks were the weakest yesterday. Will the pain continue today?
Well, if we talk about the Qs, you have to talk about the NASDAQ. You have to talk about some of these high flyers, Apple, Google, Priceline. That's going to drive here, and you can see the Qs yesterday seeing some selling again. Look at those averages starting to turn down. So the dynamic here is changing. We don't have a great area of support in the Qs. You have probably a little bit of support here in the low 65s, and then if we can convincingly get through there, you could see a move into the lower 60s, 62 to 63 in the Qs. So I'd be very careful about buying here. It looks like price to the downside is actually picking up, as is volume. So volume's increasing as selling is becoming more intensive. So be very careful about stepping into this. Like I said earlier, you don't want to step in front of a bus. Not to say that this is really a bust, but at the same time, give it a chance to work itself out. If this becomes a good long strategy, it'll happen over time. It's not going to happen in just a moment's time.
Okay, financials did rally yesterday. We've already seen earnings from Wells Fargo, JP Morgan, Citigroup, now Goldman Sachs before the bell today. So how is the XLF shaping up?
Well, the XLF, we'll take a look at it here longer term. We saw the carnage of what was 2007 and 2008. Off of those 2009 lows, not much of a bounce here in the XLF. Never really in the last 6 months got above its peak high here, right around $17. So a little bit of worrisome there. And with JP Morgan trading off, post earnings, and now, what looks to be Goldman Sachs trading lower post earnings, I'd be very careful about the XLF. To me, it's a warning sign. Never really saw that enthusiasm in this ETF, and it never really came back with a vengeance, especially in the last year and a half, as the market's made new highs and has been a very good supported sustained rally. I'd be very careful about being a buyer in the XLF, and if it were to break this little bit of a trend line here, you could see some more selling develop. So keep an eye on the banks today. I think that'll pose clues here for what to do in the XLF, but I'd be very careful about being a buyer.
Now, in recent weeks, we've seen some troubling signs of deterioration in the residential real estate sector. So where is resistance and support for the XHB, the home builders?
It's a good question. The XHB has been a good trading vehicle. I know Scott's talked about it many times before as he's looked at home builders. But we'll take a quick look here at the XHB, which is the ETF for the home builders. Again, one of these charts where you can see the devastation that was 2007, 2008 in home builders, which we're all very well aware of. And now we've bounced back over the last 6 months. So it's been a little bit of a tradable bounce here since the September, November lows. Now we're flirting with possibly a pullback. It wouldn't surprise me if you saw a little bit of a pullback here, and we can reevaluate thereafter. This looks to me like it could trade down possibly to the low 18s, maybe even into the $17 area from a daily chart, which is really more short term. A little bit of a bear flag setting up here. We saw 2 weeks of selling, a little bit of a snapback here. This to me could set up for one push lower, in which case we then probably look at it for a potential buy.
And we have been seeing relative weakness out of the OIH recently. Is that likely to remain out of play?
I would say so. I mean, we now have a sort of a trend in place working here. You can see again our averages have turned bearish. They turned bearish back in March, and the OIHs have consistently made lower lows. Every 2-day pop, 2 or 3 day snapback into these declining averages has been sold. And again, even into last week and yesterday, more selling here. So it wouldn't surprise me if these, look to break away to the downside. We don't have any real good level of support until possibly down in the 36 area. So, unless you're on the short side of this trade, I probably wouldn't be trying to pick a bottom. No reason.
All right. Well, we're going to be diving into high beta tech stocks and how they're declining yesterday. We'll transition into trading today right after this, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back and we're talking high beta tech stocks, really weak yesterday, seeing how they're going to shape up for today. Let's start with Apple on its worst 5-day losing streak in over 3 years.
It was bound to happen. It has to happen. It's been a great story. It's been a great run. There's been a lot of money made for a lot of people, retail investors, institutional money, day traders, all walks of life have probably walked away from this stock saying this has been a great run. But you have to recognize as a trader when something changes. I say it all the time to traders. And something has changed. Clearly something has changed. Volume increasing, a little bit of that panic selling trade yesterday for those that were tuning into the way this was moving. We haven't seen it move like that in a while. So you have to recognize when, the party ends. And I'm not saying the party has ended forever, but for now we have to respect that the trend has changed, the composure has changed, and the trading strategy along with it probably will change as well. We are approaching an area maybe into the 560s where it could be buyable for that 2 to 3 day snapback, as it probably wouldn't be uncalled for. But trying to pick a bottom randomly in a falling knife can be a very, very, very dangerous, high risk tactic, and something we don't support or advocate ever. Make sure that if you're going to trade Apple or some of these high beta tech stocks, you're doing it with a tactical approach.
Well, in Priceline, we did see more selling yesterday. The question now remains if we'll see more selling today or over the next couple sessions. So are we on our way back down to support with Priceline?
I think Priceline, just like Apple, again, been on a parabolic run. We can look at the chart here. You can see we took out our little bit of support down here around 710. The stock really just getting crushed yesterday, down about 30 bucks. Percentage-wise, about 2-3%. Off the top of my head, I don't really know. But there's not much support now in this zone. We could see, maybe a 1 to 2 day pause or consolidation. But this is a high flyer, and when it goes, it goes. And there's really not a whole lot of support that I would step into until down around the 640 to 660 mark, where you might see a better opportunity to step in as a buyer.
Google down about 7% since earnings on Thursday night. Is this one that we should step away from while it recovers?
Well, again, it depends. I think it's a great vehicle for the active trader. If you're an active trader, stock like Google, you can, if you're tactical and you know your levels and you know your approach, you can probably step in and make some money on the short side or even the long side when it does appear. Right now, I think if you are looking a longer term and you're looking to commit capital longer term, probably not the name you want to jump into. We've talked about it yesterday's morning call, getting rejected multiple times here. This weekly chart off this upper band at 650. we go back 5-6 years, you're going to see that rejection happening again post earnings. So this could definitely go lower. At this point, I'd probably be hands off until a setup develops and you have a little more confidence in that setup.
And Baidu earnings approaching next week. What is your game plan as they approach?
Well, with this stock, it's, again, one of these high flyers that we've seen, just tremendous opportunity with. Over the last year or so, Baidu's been, a little bit of hit and miss. It hasn't really been a trendable stock, although it has had a nice move off of this December low. A lot of choppy action in here. I'd be very careful about being a buyer up here. If we look at the chart, you can see into an area of resistance back here in that 150 mark. And even the last couple of days, it's held in very, very well, showing some good relative strength as the market's made new lows, but very choppy. A lot of overlap, up and down and up and down and up and down. So I think if you're going to play it, look for a breakout through that 151 mark. And, on the downside, through 144 would be support. If it really were to, push through that 144, I'd be hands off for now.
I think it's interesting to note that with a stock like Netflix, many note that it seems undervalued at today's prices, but for the short term, will it continue to trickle lower?
Looks to me like it wants lower. We saw one strong bounce into 2012. That bounce has really tapered off as the market's made, new highs, especially the last 8 weeks. The stock has started to push down. A little bit of a sell setup for those that are familiar with this strategy. Down move, under the moving averages, 2-bar snap, and then getting sold again yesterday. So we could probe lower. We don't have any, level of support until down around the $90 area. So could be fishing for that $90 area.
All right. Well, really quickly, a high beta name with some earnings out this week. Chipotle, what's your strategy here?
Well, my strategy is to wait and see what happens with earnings. Earnings, I think, tomorrow after the bell. It's been a high flyer. It's been an rock star. I'm going to put rock star status on this stock. Being bought on every pullback. But, we have to respect the fact that earnings right now are being sold, especially in some of these high beta names that have had unbelievable runs. Chipotle, no different. We could see, a blow off top, possibly a breakaway gap. But for me and for the traders here, probably no trade until after earnings.
And Intuitive Surgical reports earnings after the close. I've seen some articles claiming that the shorts are wrong about this stock. Do you agree with that?
Look, on every trade, there's going to be somebody who's right and somebody who's wrong. I think if you put 10 analysts in a room and ask them about this stock, 5 of them are going to say one thing and 5 of them are going to say another. What matters most is what the market tells us and what price tells us. Right now, price tells us that, the market likes it, the market likes the story, and we have to respect that. If you don't respect that, you can get your head handed to you. With earnings, again, one of these high flyer stocks, high beta, has had an unbelievable run. Could be some profit taking with earnings. One of these types of trades where I'd say no trade until, let the market tell you what we should do. We're either going to break away because it's going to be great earnings, or we're probably going to gap down. And I know that's not really a clear-cut approach, but I think we need more time to make a tradable, decision-making strategy here to put on a trade.
Caterpillar was a silver lining yesterday, up a little bit, tailing off, I think, a little as the day progressed. Could we see it go higher today?
Going to be tough, I think, for Caterpillar. It's actually had its move. We see a nice 4 or 5 day bounce off of the 200-day EMA right here around 100. So we had, a sell-off from 116 down to 100, a 4-day snap to about 107, 108. Tailing down yesterday, starting to see some profit taking on this bounce. I probably would be hands off here. If it's going to go higher, it's probably going to, base up here for a little while, possibly a week or two, and it might give you a better entry for a long. Right now, I'd probably say avoid.
Okay, and F5 Networks reporting on Wednesday. In the broad pullback last week, we saw heavy volume in this stock. How's the chart shaping up for that one right now?
Not too good. Big sell-off over the last 2 weeks, and really just starting to base down here on the lows. You can see 3 or 4 days of just overlapping consolidation on the lows. Really no bounce, no. Buyers don't seem to be pushing this one back up. So I would keep this one on the cards for lower prices to come. There's an open gap here. You can see below this, 116 area. There's basically a hole down to around 108, 110. So be very, very careful with the F5. To me, with some more time, this could push a little lower.
Okay, and of course, just wrapping things up, we do have our slew of earnings reports coming out today, this week. Highlights on financials, tech. Where's your focus heading into trading today?
Well, I'm an active trader. I like to flow with the money. Right now, I'm going to watch the high beta stocks. I think there's lots of opportunity if you're a nimble tactical trader. I'm going to watch some of the earnings plays. I'm going to watch Goldman today for a trade. Again, don't really have any preconceived ideas. I'm going to watch to see how price sets up, and I'm going to watch I'm going to watch IBM at the close today. I think IBM will be a tell for tech or a possible bounce for the market into the next couple of days.
All right, sounds good. Thanks so much, Evan, and happy trading, everyone. Have a great day.